Okay, let me make sure that we're live on YouTube. I actually think that this looks better. And then if we want, we can get that going. All right, cool. All right, so happy Monday, guys. And yeah, let's go into see what's going on with the markets. The educational portion of today's stream will have to be kind of done at home, not only by you guys, I mean, specifically by myself, and we'll kind of check some things out here. So we'll throw up the expected move here. We've got that going on, and we can see that we've started off the week on the NASDAQ down 0.8, or actually closer to 0.9 of a percent of a negative return right there. And we've got some different things going on here, which was very interesting. The NASDAQ usually has more volatility than the S&Ps, in a sense. Maybe a higher beta. That might be the more proper terminology for it. But what I was noting was that we were outside of the 64% range right here, and I was thinking about structuring up a spread trade between, or just thinking about some cool things that we can do. And I was thinking about buying the NASDAQ and selling the S&Ps, and that trade right now today probably wouldn't be working out the best, but maybe it's a time to do it right now when that spread is a little bit wider, or pair that pair's spread is a little bit wider. And let's see where the ES is doing. ES is down 0.5%, or closer to 0.6%, and the NASDAQ's down 0.9%. So let's see what some other metrics are showing us. We can see the similarity is decreasing. The moving or the average is still kind of headed up, but the raw SSR value, which is that step line with the rhombuses, is headed back down a little bit, it seems like. This is on a 4-hour. I'll make sure to get this onto a daily. And this is on the weekly. Okay. Yeah, so dues still positive, and or XEM still positive, and then we have the do, which is right there in that white step line type rhombus. I'm just gonna check the stream and make sure that everything's looking all right for the viewers. beasties over here. Maybe he's saying something. Let me double check. Yeah. If you're trying to talk on Discord, I can't hear you right now. I'll definitely add in that feature as we get moving along. But we'll keep going into the market analysis here. Whether you're joining me on Discord or YouTube, thank you for going through some of these technical difficulties. All right, let's go. So I'm going to actually drop this down to starting off with a 12-hour in the middle. Actually, not that. We'll go 12-hour right here, and we'll see what's looking out over here. And so we can kind of get a look at some volatility metrics over here and make sure we're on the right chart. Cool. And we can put this on the 12-hour as well. And we can see the Hurst going into a state of mean reversion, and you can see the VRT is looking kind of, there's a little bit of trend popping up over there with that first VRT, and we'll turn those on. Yeah, so VRT1 going up there, so you can kind of see that there is a good amount of spread between those tests, and 12-hour SSR is decreasing as well. So that's interesting. We got a 12-hour flash on the 9th of December. And the volatility is picking up on that lower sample length HVP. And you can see the 12-hour XEM and MON 3G just in general more neutral. And R squared high, so that's what we're looking for on the 3G at a 0.7 of R squared value. Let's check 4-hour. Yep, so 4-hour entropy increasing, and we also have that HVP expansion right up here. And let's actually, we could push down that expected move a little bit if we wanted to check out kind of where the 1.5 standard deviation would be. But yeah, so that 4-hour look, so you see that HVP expansion, and then of note being that higher sample length HVP, definitely has room to run. So while the lower length is printing hundreds, shouldn't say printing, it's a calculation. It's calculating hundreds. You have the higher sample length that can stay, that doesn't expand and contract as much due to the higher sample length, of course. And we also have historical volatility rank. That is low as well. It's still in a state of contraction. It's good to get the whole suite of volatility metrics. And when we left off on Friday, we saw the HVP on this right pane over here, in a state of looking ready to expand. And I was kind of looking for it to be a little bit more positive, on the positive side of the returns. But we can see how this volatility expansion has been to the downside or producing some negative returns. So that is interesting. Just kind of how the S&P and NASDAQ are in some different states. So from what I've been looking at, it seems like the S&P is a little bit stronger than the NASDAQ as of recent. And let's see here. All right, let's keep going. So yeah, so that the kind of more the broad-based indices. We can look at the Dow. Dow is down nearly 0.7%. Kind of right about that 0.6, and yeah, so we've got the Nasdaq down as well, down 0.9%, and then you also have the S&P 500 down nearly 0.5%. So interesting stuff going on there. Actually 0.6%, whatever. And natural gas is in by 3%, $3.80. Actually, really cool move right here. You don't see a lot of these. These moves, of course, because there's a 0.15% probability that they happen due to the expected move calculation, or because of the it's just based on the expected move calculation. So we can turn on the labels here and indicator name labels, and then you can see the expected move range 3 is at $3.73, and nat gas right now is trading at $3.81. So very interesting to see that large move in the commodity that helps power a lot of different things going on. So let's see here. I'll turn those indicator name labels off. Makes things easier. But look at that blue box right there is indicative of the third expected move, and the third expected move is at a 0.3% probability, and that's for both tails. So for that one tail of the distribution, 0.15% probability that we will close the monthly for natural gas at $3.73. But we were kind of learning some more about moments, and we did have a, that's embarrassing. But hold on 1 minute here. Is there anything that I'm not using on this chart? Not really. So I'll put it over here. And is there anything over here? Yeah. Actually, so we can type in moments, and that will show us that there's significant kurtosis, of course, in natural gas. Let me reset these settings. You can always reset the settings if you mess them up, like I do all the time. And we can put this for the past year if we want, and then we can, yeah, I think everything else looks good. We can obviously show the kurtosis value, and we can see how on the weekly the excess kurtosis is significant here. That move up right there, so a significant level of kurtosis. Last week on Friday, I was using a kurtosis or a sample size of 50, or sample size of 100, and it seemed like that was maybe that sample length was too high. So if you keep it too high, then it doesn't fluctuate as much, or I don't know. I don't think that would be too big of a deal that your sample size is at 100. But yeah, definitely significant kurtosis. And yeah, if I wanted to drop this down to like a 2-day, we could see how that varied right there, where since the 6th of January. There were points though that there was negative kurtosis in the natural gas returns distribution, and yeah, that's just something that I think is interesting. And but that just goes back to the point where, yeah, you can have a very highly unlikely scenario play out on a higher time frame, such as the monthly. But if there is excess kurtosis, that's just a feature of the way that natural gas, just the feature of the natural gas returns distribution. So assuming that normal distribution and things like that, well, there's quantifiable metrics to see how normally distributed returns are. So that's definitely an interesting pick right there. Maybe I'll think about, but this is just specifically to learn really, and with actual world events. I think that's one of the best ways to learn. And if you want to learn more about the actual trading and things along those lines, on a daily basis, then go check out Calculating Wealth. That should be in the description of this video here. And Calculating Wealth is they are one of the BApig streamers, or just uses the tools. He's a trader, and he knows how to really structure some cool trades, and is focused more on trading and making money today. And this stream is a little bit more, I don't know, I'd just say it's more of a studying type of thing, as opposed to making money today, but more of investing into the future and things like that. And that was something I was thinking about today, is that a lot of traders, that I've come across, and me being one of them, is that you're learning and you're trading at the same time. So you're kind of drinking out of a fire hose in a lot of different ways, and which is kind of like, so you're putting risk on the table and things like that. And it's kind of a better way would be to learn and then start trading. So that's really like the focus of this stream. And then if you feel comfortable enough and want to start taking some risk, then going over to Calculating Wealth, and you can see a lot of kind of trades and thought processes behind making those trades. And that's, I mean, ultimately the only way we're going to learn is by trading. So we'll definitely get to that point, but definitely trying to take things slower. And yeah, so natural gas down 3%. And what else here? This is Swiss franc, yeah. Not too much movement there. The VIX climbed up today. That was so you can see this close right here. Let's put this on the daily. And these are the types of really interesting occurrences that happen with assets like the VIX, or indexes like the VIX. Less of an asset, but it is a good hedge. And for S&P volatility. And so you can see that with this close right here at 1869, that was outside of the second expected move, so less than a 2.5% chance that was going to happen. And it did happen. And you can see the kurtosis is very high in this index right here. And yeah, so this is your 64% range on the VIX, and it opened up today at 1930, and it looks like it's up $1 or so. So high at 21.18. So it was up more toward 10% in the intraday, but the nature of volatility is to contract more than it does expand, and more particularly the implied volatility, and that's what this index tracks, is implied volatility on the S&P 500. So implied volatility contracting more than it does expand. Obviously asset to asset, you'd have to perform some calculations and things like that, but we'll maybe be able to do some work like that in Python or whatever. But for now, that's kind of what the norm is from what I've seen, from the empirical research that I've seen. But if anybody else has anything to talk about with that, I'd definitely like to learn more. But yeah, so we've got a 32% chance of closing at 22. You can turn on the indicator values, and then that will show that 32% chance of closing the week at 22.80, and then a 32% chance of closing at 15.78. So you can kind of see the opportunity that lies in this asset. There's about a 44% range on that, which is cool. So that's 64% probability of closing in between there. But yeah, the VIX, of course, tracking volatility, tracking implied volatility. Thank you for bearing with me. And yeah, the center line of the distribution on the weekly for the VIX sample size of 100 is about $18 or 18. Yeah, this is quoted, I think, in it's the implied volatility, so it's not. But you can go over to the cash right over here if you want to go to VX, and then this would be the cash. But it hasn't. I think it gets updated at the end of the day, from what I know. But that isn't too much. So kind of seeing some volatility come in here, in both sense of the word. Not only realized volatility or historical volatility, but also implied volatility. And maybe we can see some other symbols here. Yeah. So let's see. Skew. That's another way to track the way that people are hedging their portfolios. I'll go into kind of what this index tracks as well, but this is another good measure similar to the VIX. Bali's in the building. I wish I could definitely get you on right now, but I can't really hear everything going on. I need to get one more output, but I'll make sure to get that ASAP. And so let's keep going on here, and let's go to some individual symbols, some company specific symbols here, and we can look at AMC. AMC is down close to 15%. GME down close to 15%, 14% really. Both of those guys been getting hit pretty hard. Backed, that's another one that we were checking out. Onyx, hopefully you didn't YOLO in on that most recent pump, because yeah, there was some definitely higher volatility coming. Well, there was just a volatility expansion in returns, and you can see how this Backed has been. This was a SPAC, and then it turned in. But yeah, it was then it's now company is the Backed, right? So about, it's been trading for about 55 bars, 55 weeks. We can check that out. And that was a 3 standard deviation move to the upside. That was a 360% weekly return, and then it even got up to a higher level at 50, which was even more so, but with that gap right there, so we could measure it from there if we wanted to. And that was 450% on this crypto exchange. And what else we can look at? Right over here, hitting that first expected move, or that 32% probability, and at 1280 on the weekly. So if you're looking to lower some cost basis, maybe you want to dip your toes into the water or dip your toes into the backed waters if you want. But again, this isn't financial advice, or I'm not making any decisions like that. But this is just more of a market overview. But if I were making decisions right now, then this is what I would be doing. So let's see. Just want to be able to kind of keep things going. I definitely need to get more monitors, but anyway. ETH is down 10%. We were kind of looking at some of the cryptos here, and they weren't looking too desirable from a immediate type of time frame, or a short-term type of time frame. And yeah, we were looking at how on the weekly we were getting that first cross down from the XEM. Crossing the XEM, crossing the DO. I definitely didn't like that. And over here, so then we can actually go to a monthly probability over here. And let's go to, let's make this 12 and 12. So 12% chance of closing at those white lines. So, or 12% of outside those white lines. And looking at that right there. so you can kind of see that daily how we got that red XEM. And then now we're getting close down to that. We're getting close to the 12% monthly probability at 3,600. So that's an interesting area if you're a long-term accumulator of ETH. And let's see if there's anything else that's interesting here. There definitely will be. Historical volatility rank, great metric right there. Great flash, or just great example of how using different metrics are definitely helpful. And you can see that volatility expansion, entropy is dropping. So this is a relatively non-random decrease in price here. And looking at kurtosis, of course, ETH has some high kurtosis. I wonder if we make this sample 500, see if that affects some things here. Oh, that's on a weekly. So we'll have to do, let's try 200. Yeah, so that kind of gives you, it doesn't help you as much. So maybe we'll just do it on like a quarterly basis. So for the past 12 weeks. But I think that I don't know why you wouldn't want a higher sample size. But anyway, so sorry about going off on those tangents. But that's kind of what I'm trying to learn is. But let me see. Yeah, so ETH, this is a daily chart right here with the monthly expected moves, and then we have a weekly right here, and the weekly expected moves. And let's make sure to get that back to 100. And yeah, so we're already at the 12% probability on the weekly, 12% probability of closing this week at 36.89. And let's check some lower time frame returns, and we can see the SSR is increasing, and it's getting up towards that second standard deviation level right there. So we'll probably see we'll probably see the similarity of returns decrease at some point, but doesn't mean that it can't get outside the band, and does not mean that it can't get up to levels of 0.45, which would be very significant. Kind of looking at that from right now, we're at negative 0.03, so the similarity of returns are not they're relatively not that similar, but there are instances of a rather high similarity. And yeah, so looking at that, yeah, so there's a kind of a higher similarity going on here, and the way that I look at that is that this decrease in price isn't just kind of a random type of event. There's some non-randomness to it. Let's see. Let's see VRT. Yeah, so let's check this on the 4-hour. So yeah, you can see how the different VRTs, they're not moving kind of in sync. You can see how there's a good amount of disparity between those values. You can see VRT5 versus the other VRTs, that there is some type of non-randomness going on from the way that I read that, but maybe I'm mistaken. But anyway, you can see how HVZ has expanded, and yeah, with ETH right here, if you're a long-term accumulator, maybe you look at lowering cost, but you wouldn't be looking at a 4-hour chart. If you're a long-term accumulator, you'd be looking more at things like a weekly. So let's check out the week. Yeah, so look at that on ETH. that's just a warning sign. The way that I take that right there is looking at HVP right there. Not only your low sample length, but your high sample length as well is close to zero. So that right there would be saying don't accumulate there, and going back to what we learned about kurtosis as well on the weekly, that just because there's a 12% probability of closing the month there at 3,600 doesn't mean that the returns distribution stops at that point at all. And just looking at the volatility here, there's room for expansion, a lot of room for expansion. You can see some really volatile moves here. This expansion right here, that was a really large pump right there, and that's coming from an opening price of about 450, and then over the course of months, you can see, obviously being on a weekly here, I mean, going from 450 to about $3,000, $4,000. That was kind of like a similar type of flash going on there, and then I can put this on. Well, this is a correlation right here, and I know that correlation isn't the best measure, but it's a good measure for what we have. Definitely a way better measure than anything that I've coded. So yeah, looking at the lower length HVP. So you can see this, and then this HVP makes it so that or this CC correlation coefficient is incredible, because while correlation is limited, there are other statistical measures and tests that we have to be able to put that correlation into perspective, and this is everything you look for in a strong correlation. But to note that you do have the z-score of the correlation kind of in no man's land a little bit, in the insignificant land or insignificant area. Sorry about that. And then you can see the correlation being at negative 0.7. So I see that as a strong negative correlation, and then r squared is high. So looking at that, you can see the r squared being at 0.57. But r squared is also moving down, so that is of note as well. But we can also look at the other HVP as well, and we can see how that correlation, it might be a little bit stronger. So then if you want to undo, you can undo, and you can see the difference in the correlation. The lower length sample length having a much stronger correlation compared to that higher length HVP. But yeah, that's definitely interesting. So we'll actually keep it on the first HVP. So let me just show you, is that, so the first HVP being the 4/16 length, and then the second HVP being 10/100. So then I can turn off the 10/100 length HVP, and I can turn on, or I can just keep the 4/16, and then the 4/16 expands, contracts, and then there's the higher length one that does expand and contract as well, similarly, but just takes in a little bit more data. So when I refer to the first HVP, it's that orange step line. Yeah, so ETH not looking the best on that weekly type of time frame. Let's see. This is on a weekly as well. So this is on Coinbase. So if I went to Bitstamp, there'd probably be more data. Yeah, definitely. And you can see how entropy has increased on this Ethereum dump. Or I shouldn't say dump. I'm sorry. Or bear with me for a minute. Is that yeah? It's not really a dump. It's just negative returns. But you can see how entropy is high. So the randomness in this trade is, so that is interesting here. SSR is relatively high at that 0.07, but I mean definitely can be way higher. It's actually not relatively high. I would consider kind of, you can see the spread of the data right there. and the similarity is increasing. So we let's see what this looks like here. So similarity and returns have been increasing, and still increasing. So that is definitely interesting. And this is on a weekly as well. You can see the HVP flashes, so saying that HVP is at 0, get ready for expansion, and that can be either positive returns or negative returns when you see that volatility expansion. And what else can we look at here is we can look at well, let's see what things look like on a 5-day. So 5-day, you can see that low length HVP. It flashed when prices were at 4,500, flashed again at about 4,700, started expanding and going into that negative correlation. That's a fire read. That read right there is crazy. Like when you see those types of reads, but of course, obviously it's happening in real time. But that's what you're looking for that CC. So you can see the CC, like where if it were just this metric right here, the red rhombus, then you wouldn't have as much context on is this a strong correlation. But then when you have the other tests as well, that adds validity to the correlation from what I have read or what I've learned. And we can so similarity picking up on the 5-day as well, and then that MOM 3G as well showing you. So 3-day low as well. So 2-day just moving into that negative correlation, but the 2-day HVP is a little bit higher. But then you could defer to things like HVZ, fairly high, not the highest it's been obviously, but fairly high at that second standard deviation. And you can also HVR, historical volatility rank, showing you that we're just pushing up onto that moving average, and I put the moving average at 500, and so that's for the past 500 2-day candles at that SMA. Volatility flash occurring on 17th of July 20th. So the HVR is a longer term metric from the way that I use it, I guess. And then so we're getting up above that 500 period SMA of HVR candles. So this isn't obviously an SMA on price or anything. That's SMA on volatility rank. And so entropy is high on the 2-day. So let's check a daily. And then you can see the daily entropy just moving down right there, decreasing. Historical volatility rank gave us a flash on the 14th of November. That's incredible right there. And is it always going to do that? No. I mean, this is an independent observation that we're doing. Well, everyone is, and we can put this EEC onto historical volatility rank, and we can look at that correlation as well. And you can see how things are picking up here. You can see how that correlation is negative, obviously, and there's the z-score moving down, which is exactly what you want for if you were hedging your portfolio or whatever, or if you were short futures, or if you had a negative bias towards price, or but this is just more so thinking about the correlation and strong correlations, and you can see the R-squared moving up. So that is a good correlational read right there. And so we can look at things even more granular if we want. We could go to a 12-hour, and the higher length HVP is fully expanded. It's not fully expanded, actually. It's at a 75 read, and then that lower sample length is expanding as well, and it has room to expand as well, 37. So just kind of indicating to me that yeah, there's obviously going to be some positive and negative returns and things like that. But when that HVP tends to fully expand both of them, then you'll see like a shorter time frame, kind of. Well, I mean, I think that's a mischaracterization. I shouldn't really speak like that. But yeah, so entropy on the 12-hour very low at a 0.55. So when I say very low, let's compare this historically. And the last time that we were at a 0.55 was the 27th of May. Yeah, 27th of May. So yeah, fairly low. The lowest entropy has been on a 12-hour for Ethereum has been 26th of November 2018. And that was at a 0.191. So that's context in relation to this 0.55 read. And yeah, so yeah, this is definitely something of note, and entropy can definitely get a lot lower. So that would be interesting. So if we were short, then I'd definitely be keeping an eye on entropy, and as soon as I saw something, as soon as I saw entropy increasing, then I'd probably look to close, or even if I was in a good amount of profit or something like that. But that's kind of more of an advanced type of thing, and more anecdotal. And I can put this on to entropy as well, the EEC. So you can see the EEC, and that okay, this is a strong correlation at this point right here, and that any type of increase would or that as prices increased, entropy's correlation kind of gained as well. So this positive correlation. So just because it's positively correlated, well, if entropy's high and it has a positive correlation, then when entropy starts to decrease, and if that positive correlation stays, then there should be some negative returns coming along with that. This is another high correlation right here. Great correlation, much higher than HVP. That's why I like correlating entropy, because entropy seems to have a stronger read with price. So that is definitely interesting, how low that is. So then we can go to like a 6-hour, and you can see how the SSR is starting to get into some extremes right here. Is already near some extremes. The mean of SSR being on the 6-hour at 0.19, and this value at 0.34. So roughly double the mean. But don't try to, like, just because that's high doesn't mean that it's not going to go higher. The mean is following the green dot. The green dot's not following the mean. And what else here? HVR is low, not terribly low, 0.34, but just of note. And HVZ is just kind of at its mean, so very similar to SSR. You can see the mean right there of the historical volatility z-score at negative 0.75 on the 6-hour. So thinking about that in context, then yeah, it is above its mean, or the z-score is above its mean, right? But it's still negative 0.38 standard deviations away from or just negative 0.38 that z-score read from its mean. So thinking about that is, I mean, so you could get up to positive 3.58, and even higher. Of course, you go to infinity, but obviously, I mean, you don't see 10 reads here. You see, because it's a z-score, but yeah, that was a high value right there. So yeah, so taking that into context, historical volatility in terms looking at it through the lens of the z-score, it's low. So and self-similarity returns, like we said, was high, And yeah, just take this into context. Is that the monthly there's a 12% chance of this month closing at 3,600. You can just drop this down, right? And we can show indicator values, and then I can get an exact value of 35.9975. So 12% chance this month closing at 3,600. And let me just check on the peeps in the Discord. Really sorry that I can't make this a lot more kind of decentralized and just so that we can all learn together and things like that. I don't want it to be just me droning on and things like that, but we'll definitely get there. But yeah, so it's 345 right now. Let's go back to some equities over on some U.S. exchanges here. So yeah, so AMC and GameStop and Bakkt, they're getting hit pretty hard. I would kind of consider those some risk assets. So yeah, it's just some risk assets getting kind of beat, and Ethereum too. That's definitely another risk on asset. So let's see what's having some positive returns today. This is a shipping company. They do like container kind of logistics. Hapag Lloyd up 10%. Bio and tech, so they make I think they're a pharmaceutical company, and I think they're in the vaccine space as well. And then Peloton up 7%. So I would definitely categorize Peloton as a risk asset. So just because some risk assets are decreasing in returns, or returns are decreasing, doesn't mean, or negative, doesn't mean that other risk assets are going to be doing the same thing. And then you could check the mutual information of other. You could do that as well. So that would be maybe if you wanted to have a short bias and then some long, you could do some things like that. We'll get to that point as well, hopefully. And Lucid. So Lucid was of note. I heard I walked into a store, and I heard a store owner, and he had some financial person talking, and they were talking about Lucid. So let's just check out these guys here for a minute. This is on a 6 hour, so maybe we'll just put it on to. We'll put this onto a weekly, just for a minute, and we can check the weekly returns. So for about 50, so we'll do. Oh, this is on a monthly. My bad. We'll go over to this chart. We can check out Lucid and make sure that this expected move is at about 45. And so last week, it looked like it was about a 1.5 or closer to the second standard deviation, or 2.5% probability of closing at 34.66, and this week up 4%. But these just remember that these probabilities they're separate in a sense that you're having the this week's probability, just because last week's probability was close to 2.5% probability, doesn't mean that, as a matter of fact, that you're going to see positive returns or anything like that. I don't want to be sound to kind of misconstrue my words or whatever, and think that, oh, just because this went down, and that goes back to Kurtosis. So you can see the Kurtosis right there, and it's significant. And we can even go down to, like, let's say a 2-day or whatever, and you can see how Kurtosis is really high. So right here, you can see how it went from negative to positive. So that might be something to note, is that when there's negative Kurtosis in assets like Lucid and stuff like that you might want to be aware of that, and saying, okay, how much longer are we going to see this? And that would be probably a function of volatility as well, not directly but indirectly. So yeah, that is definitely something interesting. Is that Lucid, but not as much data on that. So, but HVP expansion, where is that? Over here. That's interesting. So what else? Pfizer up 4.5%. Rivian